This is our Forex blog post for March 18th, 2011. And one of the things that we want to do every day is just see which currencies are super strong, which ones are super weak, and trade those. Now, last night, the yen was just incredibly weak, but the weekly and monthly trend underneath it were strong. So, you never know how long a counter trend, weak trend will go. The longer term weekly monthly trend are pretty strong. So, usually you can expect maybe 1 to 3 hours in that direction. This one lasted a little bit longer until some strength came in, and it flipped back and forth from strength to weakness. The euro is without a doubt the strongest of all the currencies. The daily, weekly, monthly trend strong. Showed a lot of strength last night. Showed a lot of strength here at 6, and so this made the most sense to trade. Probably you would want to see some weakness in the dollar. The dollar is preferable to the yen because the longer term yen trend is up. However, the real time, anytime this gets pegged out at 100, pretty much all the yen pairs are going down, and they're going down a lot. So you certainly can, trade against that. Euro yen last night would have been an amazing one until about 3, and also from 6 to 8. So we'll start with looking at the euro yen. You can see last night, obviously, it just absolutely exploded up. You might have, obviously, this had to be news related. You probably did not catch that trade, and at this point, it's so far above the upper band. You got to be really cautious buying up here. But without a doubt, this went sideways for half an hour, didn't pull back, broke out. You might have got into it at the first, pullback, but after that, I probably would just absolutely avoid this one. Much safer, or I should say, lower risk type trade was the euro dollar, which also went up last night and kind of consolidated and chopped around for many hours. Found support at the previous day's high right here, monthly pivot level, and the second pullback also had a counter trend buy signal. You can see a lot of intense strength last night, not that much weakness, and as this thing kind of went sideways for an hour and broke out right here, great place to get in, and it just really just exploded on up. When it gets above the upper band, any sign of the momentum slowing down, you want to get out of your trade. You might have got out somewhere up here near 35 to 30, but you're in here around 60. That's a 70 pip, 70 pip move. Excellent. Another one that became relatively strong at 6.2, but not nearly as much as the euro, was the pound. The pound, not as good at odds trade as the euro because the weekly monthly trend are just so strong on this. But if the euro's been up 4 or 5 days in a row, and it's gone up too much, just because the weekly and monthly trend are up doesn't mean that it couldn't have a pullback today. The beginning of any trend, in my opinion, for me, it feels the best taking the trade, and it also, in my opinion, from what I've seen and traded, is the lower risk trade. Once the currency's up a lot, it can go up. It can continue up like the euro yen did today, or it can also reverse violently against you. So just because the pound has a weekly monthly trend that's down and starts to show some strength here, 637, you certainly could look for a pound dollar trade. You can see that 637. This one was coming off its lows. There's a monthly pivot level right here which acted as resistance, the whole number, and when it broke out here, that's not a bad trade. Usually it stalls at the hourly moving average, but in this case it didn't. It kept going up, and then later in the day you can see the market had kind of an Elliott two-wave pullback on here. Let's draw our fibs on the chart. I like to see the first wave at least 20-25 pips minimum. This pretty much barely meets that criteria. You can see it came down to the 1.618 area. If you're a really aggressive trader, pulled back, went sideways, took off right here. There wasn't a whole lot of statistical weakness. Previous trend strength up was just mild. Of all the Elliott two-wave pullbacks, this is definitely one of the least powerful ones. But you might have got into that trade and it went sideways here and you would have got out. Anytime you have, and you can see it exploding up right now, you can see an hour and a half, 2 hour sideways range right here, right at and underneath the previous day's high. And so when it broke out right here, this is a great trade. You don't know if it's going to take out the high right here, but if it does, the next area of resistance is right here. We're right there right now, up here around 62.10. You'd buy this somewhere around 61.75, 76, and you can see it's up, almost 30 pips. That's a beautiful trade while risking 5 or 10 pips. In this case, it worked. Many times you take trades, you take a shot at the market and it doesn't work and you take a small loss. That's really trading in a nutshell. Now the New Zealand and Australian are extremely weak. Just got decimated over the last few days. The New Zealand is the weakest of all. At 3:30, this started to show some weakness. You certainly could trade that against the strongest one, the euro. If you looked for Euro New Zealand sells today, more than likely you've found, or I'm sorry, Euro New Zealand buys. Strong euro, weak New Zealand. The longer term trend of the New Zealand is down. This one came down and double bottom at the lower band. Not a bad place to get in, and you can see, it really went up quite a few number of pips. It's a 150 pip move, pretty much straight up. And anytime you buy the lower band, usually the hourly moving average makes a good profit target unless there's any other support resistance in the middle, which in this case there isn't. And it went up without that much intensity. Euro pairs were kind of just inching their way up. Obviously at 6 the euro became a lot stronger, but you can see buying a longer term trend like this one at the lower bands, once you see a double bottom with a little bit less weakness. I'd prefer this weakness here to look something like that, but you also had the counter trend buy signal here right at the lower band too. Not a bad trade. CAD was just extremely weak today, so the euro CAD would have been a phenomenal one to buy, as you can see on the chart here. This one also kind of went sideways for 6-7 hours, pulled back here, didn't really go down with that much weakness. The longer term trend's up, and when it broke out over the hourly again, after not making really a significant low, this is a weekly pivot level right here that couldn't go underneath. The next resistance area up is the previous day's high right here. If you bought this when it went back above the hourly here at 22, your profit target's all the way up here at 90, about 70 pips away. There's no other resistance in the way other than a little possible selling at the half number, which you can see did contain price for about 15 minutes. So if you wanted to get out of your trade there and you weren't sure if it was going to go up and it didn't come down and then it broke out again, you could have got in that trade. Extreme strength here, pulls back. I don't know if you wanted to buy this right here, but if you did, you might have got stopped out. You had to get back in it again, and you can see that trend continued. It went up to the upper containment band, one of our trading zones, and it went up with less intensity than it had before. So get out of the trade. If the longer term trend was down, you might even consider selling up here, but it's always obviously a risky thing to do to sell a currency that's trending up like this.